Wow, the US dollar really is a wrecking ball. It's provided some carnage in the North American equity markets, the international markets, emerging markets, commodities, bonds. Will this continue? That's the question right now. A lot of investors are asking right now. I'm going to try and address that today. But I think to do this properly, I think we have to go back and take a look at when Trump was elected in 2016. Yes, there are many factors driving the US dollar, and it's different this time compared to 2016. There's no question there are some differences. But as a baseline comparison, we can take a look at what took place back then, perhaps giving us some guidance to what we can expect coming up. If we go back to 2016, we're in a very different environment. We saw the federal funds rate at 0.5%. This was in the era of Janet Yellen being the Treasury Secretary and keeping rates way too low for way too long. So when Trump was elected, this provided rocket fuel to the stock market. And so we saw the stock market perform particularly well in November and December of 2016, and then in 2017 it performed well. We're not in the same environment. We have restrictive policies going on from the Federal Reserve. Yes, they are cutting rates, and we can argue about whether it's too fast or too slow, but at 4.75% right now, that's restrictive. And don't forget, monetary policy takes a year and a half or so to work its way through the system. We've had higher rates over the last year and a half. So these higher rates are working their way through the system. So we're in a restrictive environment. And cutting rates will help. But we're not in the same rocket fuel scenario where all of a sudden, with policies being enacted that can help the economy, that we'll see everything just skyrocket higher. If we take a look at the US dollar. So let's go back. In 2017, why were rates moving higher? Well, the expectation at the time was, they were already moving higher before Trump was elected. The economy was growing. And the expectations when Trump was elected that we were going to see some tax cuts and some strong growth. And that narrative really took hold and helped to drive the rates much higher. The concern wasn't really about inflation at the time, of course. So today, why are rates moving higher? Well, first of all, I think the U.S. is the cleanest shirt in the dirty laundry. Europe's falling apart economically. China's had some trouble. They've been trying to introduce some stimulus. Hasn't really worked as well as they expected. So relative to other countries around the world, the U.S. has actually been a pretty good place. And they're lowering their rates at a slower than expected scenario. In fact, yesterday we saw Federal Reserve Chair Powell talk about, it's going to be a bumpy ride. And rates may not go down as fast as investors had expected. Hello. Hi. Hi. It's all right. It's all good. Oh.
No jumping.
Okay. Thanks.
Let's go.
I'll go back this way. I'm just at the local park. It's leash free here with the dogs, so you get to see the dogs running around, and sometimes I like to come up and say hello. So why are interest rates moving up higher? Well, if we go back to 2016, the expectations was with the Trump being elected that we're going to see tax cuts, which can provide some growth to the economy, and that we had a backdrop of huge stimulus taking place from liquidity, from low interest rates. That's not the case right now. We're seeing a scenario where we've got a 4.75% federal funds rate, which is restrictive. So we're in a restrictive environment. And the Federal Reserve is actually reducing its balance sheet at this point. They're down to $7 trillion. Still $7 trillion, too much. But they have been reducing their balance sheet. So we don't have the same economic backdrop taking place. So the U.S. is expected to lower their rates at a slower rate than other countries at this point, which is driving up U.S. interest rates. So that's a big factor taking place. Yes, there is the expectation that Trump could provide some growth as well. But I'm not convinced that's a huge part of it. And inflation is, as Powell said yesterday, it's stickier. It's sticky at this point, and it may not go down as fast as people expect. And yes, they're still expecting it to go 2%. So inflation is providing a problem here, which is also holding up interest rates as well. So we're seeing interest rates go up. If we take a look at the 10-year yield, it bottomed in September, and it's been moving up quite a bit recently. And well, how long will this last? So we have to take a look at interest rates to really get that picture for the US dollar. How long will it last? Well, if we go back to 2016, interest rates continued to rise after Trump was elected, but they topped out in December, in later December. And typically, from a seasonal point of view, we do see the US dollar actually weaker in December. It's actually one of the weakest months of the year for the US dollar. Now, it may not be this time around, but there's some factors that actually push that. And the one is that we see a lot of remittances happen from the US. So a lot of money is sent out of the country back to other countries where other families are. And it's a huge amount. I've put that in one of my books in the past. At the same time, and we also see that with companies as well, international companies bringing currencies back to their base as well. So we tend to see December being a weak month for the US dollar relative to world currencies. And we did see the US dollar top out in 2016 in December as well relative to world currencies. Perhaps we're in that scenario. Yes, there are some differences with the sectors, with the Trump 2.0 trade. Perhaps we do see interest rates at least slow their ascent in December. If we follow a seasonal pattern, we could see some weakness starting to take place in December. And if the US dollar starts to peak out, that would actually be good for equity markets, for commodities, for bonds, emerging markets. So a lot of investors have a lot at stake here. So if you try to follow this market right here, right now, I think it's important to follow what's taking place with the US dollar relative to world currencies. But if we follow what took place with the Trump 1.0 trade, we could see the US dollar actually peak out here, perhaps in the short term. I'm not talking long term, perhaps in December. Well, we'll have to see. Thank you very much for joining me today.